Welcome back to the Stablecoin podcast. I'm Luther Midday, and here with me is my co-founder and co-host of Stablecoin Partners, Rami Soleiman. Today's guest is Đorđe Žarković, head of fund solutions at Bank Frick, one of Europe's pioneering regulated blockchain banks headquartered in Liechtenstein. Đorđe has spent over a decade at Bank Frick, structuring investment funds across Liechtenstein, Cayman, BVI, Malta, and beyond. And he's one of the few bankers who has actually built the rails to accept USDC at the fund level. Today, we're talking about what happens when correspondent banking breaks and why stablecoins are the only real fix. Đorđe, with that, welcome to the show.
Thanks for having me, guys.
You have an amazing career. What was the pivot point? How do you go into banking and then say digital assets,
Oh, well, it's been one hell of a ride. So first and foremost, the bank was established in late 1998. I was born in 1998. And it feels like we went through puberty together, to be very honest with you. Back when I started off in 2016, I remember it very well. I was suited up, wearing a tie. The bank was definitely not what it is today. We had approximately 35, 40 employees, sharing the offices with two other companies, and basically we're operating under the regime improvise, adapt, overcome, and just, as I said, trying to find ourselves back there. Then I had the luck that we had some very intelligent people making the strategic decision to move away from legacy services like wealth management, asset management, investment advisory, in this very conservative financial hub, of course, Liechtenstein here, and basically opted to focus on financial intermediaries, and not only to focus on the intermediaries through direct relationships, but to basically build and bank the underlying products in order to pool institutional assets. And taking this into consideration, we had that huge momentum in 2016 when the world really heard about crypto. We partnered up with some now very reputable partners, and the rest is basically history.
That's fascinating. This is the second time that we've had somebody from Bank Frick. So our listeners are somewhat familiar from a bank perspective. But this is the question that I always think about when I think about the amazing work that Bank Frick is doing and folks like yourself are doing in that space is, the pushback prior to MiCA, the pushback prior to Genius Act must have been quite severe. How did you guys handle that?
I don't think that the pushback has been that immense for us. I think that we were a player under the radar. We weren't really a competitor. We started to bank something that people, banks, asset managers out there within this legacy financial industry didn't really understand. So the offering was for them always kind of complementary and not really competing with them. So we had a lot of time and of course the patience internally to build something together with the regulator hand in hand, and therefore the pushback hasn't really been our biggest issue, at least from a Bank Frick perspective. And with the growth of these neo-financial institutions, as we like to call them, so the OTC desks, the brokers, the stablecoin providers, the exchanges, we just grew with them. We not only improvised and adapted, we for the first time consolidated. All right, we focused on something. We really saw our niche. And we had a lot of momentum, a lot of good decisions, and first and foremost, a lot of good people internally that pushed this initiative, which has really become our DNA today.
What were the initial set of customers that you kind of focused on, and then if you looked at when you first started your foray into digital assets, here's like a set of customers. And then how have you seen that customer mix kind of evolve over time?
Yeah. So my task is basically to help our clients, predominantly affluent individuals and asset managers, with the conception and the structuring of collective investment structures. And when we had that, or I think the key year was really 2016, and the people that basically invest in these structures, so the core investor base, didn't want to miss out on this chance. And as our task has always been, or basically since starting to proactively servicing that field, build AMCs, build investment funds, bank them, provide them with the operational infrastructure that they need, we got the first requests from asset managers and from clients. Hey guys, I want to access Bitcoin, but I have no clue who the brokers are. I don't want to onboard with them. I don't want to maintain a relationship with them. I just want my regulated financial instrument.
Yeah.
I just want to inject money, and you guys basically facilitate the rest. We have a lot of trust in your know-how, your competence, and your partner network. So please make it happen. Give me some exposure. Don't let me miss out on this huge opportunity, right? So those were really the very first steps that we had. I think in 2017, we launched with the first crypto tracker, so a debt capital issuance out of our own balance sheet, where we basically accepted the first US dollars, and we're just having a Delta One strategy, so 100% exposure in BTC, right? So we needed to connect with the brokers out there. That's when we met a lot of fantastic partners. But we also had to trust each other, right? Because we're sitting on client assets. We can't have a default. And do remember, guys, back in the days, there were no universities, no podcasts, no YouTube channels, no good books out there. So it was a learning by doing journey for us. And those were really, really the first steps.
I had a question, actually, Đorđe. In terms of how far do you think the customer base has come in terms of the solution that they want? Are they more confident to say, I know this exchange now, I know this broker, I trust you guys, but I want you to do this function now, just the custody or just the structuring? Or are they still coming to you now saying, I trust you, just use your partner network, I still don't want to engage with anyone further down the chain except you guys? Or do you find it's a mix now?
I think it's a mix now. We still improvise, we still adapt, and we still have a lot of innovation. And a major point in Bank Frick's DNA is that the servicing is modular. We don't really push the clients in our products. You don't want to trade with us? You like the execution interface on Kraken more? Please go to Kraken. We will be bridge builders. We will be enablers. We will service this capital layer just from a different perspective, right? And if these clients seek exposure in digital assets, they usually go for very sophisticated investment strategies where you pool third-party assets in order to get that exposure. And on this side, it's not really about the investor base itself, but it's about facilitating the process for the promoter of the underlying vehicle in order to pool these third-party assets and in order to get that exposure on the underlying exchanges. But the client base has changed a lot as well. So we're sitting, or we're seeing a lot of very wealthy individuals that do want to take control, that now with AI coming more and more, and with the access to information that they have, they just want to control it themselves. So they want to onboard with the execution venues, they want to be in control of their assets, they want to facilitate deliveries on their own, and they don't really have too much understanding for all of the legacy rails. So it's a pretty tricky situation from time to time, and we just try to maneuver to the best of our capabilities within that very, very unique situation that we're in right now.
Do you find yourself appealing more to a younger demographic for this business line, or is it sort of you're, I guess, partly educating the legacy and the older generation, but are you also attracting the new generation because you're actually savvy in the products? You're the same age as these guys as well, which just doesn't hurt. You feel like what's the typical demographic of the bank frick crypto savvy people?
Absolutely, we do feel that. So you see, I'm not suited up anymore. There is no tie anymore, and there is definitely a generational shift in wealth. That's what we feel like. We're talking about a lot of young entrepreneurs. We're talking a lot about people that really dig deep into the matter and that really want to understand, that don't just give the asset management into the hands of a legacy wealth manager anymore. As I said, control is a big thing, and we definitely appeal very well in this demographic group, or to this demographic group of young entrepreneurs and people that just focus a lot on DLT education and, generally speaking, on financial markets education.
With a changing customer base comes a changing risk profile, right? How are you guys kind of evolving through that change?
I mean, it's just a close relationship on a one hand side with the regulator, all right? So following whatever gets implemented on a European level. As you guys know, Liechtenstein is part of the European Economic Area. Therefore, we need to integrate directives into national law. Regulations directly apply. And nowadays, I mean, in 2026, the regulators have a lot of competence and have a lot of know-how. We have a brilliant financial market authority in Liechtenstein, which acts as well as an enabler, which really focuses on making the financial industry attractive for foreign investments, and therefore we can rely on good partners there. And the auditors that have basically accompanied us throughout this journey have learned with us as well. And with the access to education that we have now, and with the amount of regulated players, again, these exchanges are now regulated as well. The stablecoin providers are regulated. So that means we grow together and really look at it as one big community. The cake is large enough for all of us, right? And if you don't have that exchange of know-how, of competence, if you don't sit down in work groups and really try to figure out how you can solve certain problems, then you'll probably not really come far within that industry.
Yeah, I think that's a really good way to put it. And your point around how far the regulators have come, both policymakers, regulators, across the board. I was in DC 3 weeks ago talking to a few of the policymakers here in the US, and their level of competence is ridiculously high now. It's no longer a question of like, let me explain what is stablecoin. They're asking some really deep questions now, which it's super exciting to kind of watch. I think we sit in a really interesting spot where we have a banker who is into digital assets. So we would be remiss not to ask this question about where the compromise came about with the Clarity Act this week. With stable coins, about rewards around not holding of stable coins, but the usage of stable coins, etc. Would love your thoughts on this. I mean, I think.
Well, it's difficult to comment it from a bank freak perspective,
of course,
because I think we're in a very privileged situation, because these stablecoin providers maintain banking relationships and they seek money market exposure and they hold cash balances in order to earn some interest rates and in order to basically offer it to their clients at the end of the day. So that still means for us that we have the opportunity to dock on with our safeguarding accounts, to offer interest rates to providers, to offer trading of, for example, T-bills, to hold these assets in custody. And it's again just a shift in mindset. But I fully understand if you're coming from a bank that doesn't really want to engage with stablecoin providers, that doesn't really want to offer access to all of these money market tools, then you will see it as some sort of a showstopper. And that's that's why I say we have a slightly different approach to that. Tricky situation, and I think there will definitely experience some further developments there. But right now, again, I think a unique situation for us to basically dock on and to continue with our servicing and to still try to enable for, on the one hand side, the stablecoin providers themselves, as well as the underlying investors.
One of the things that's happened in the past, as you're very familiar with, given your experience at BVI and Cayman, etc., is the U.S. went through this called, I believe, Rami, keep me honest here, it's the Operation Choke Point or something like that, where basically
Choke Point 2.0. Yeah.
Choke Point 2.0, where the U.S. correspondent banking had started to be quite limited for a lot of different players across the board. I know folks in the Caribbean, LAC area got affected by that quite heavily. We would love your thoughts on how do you see something like that being expanded on, made better by the introduction of tokenization of assets or tokenization of money market funds, and the intersection between that and stablecoins?
Yeah, so this is actually a very interesting topic. I think all of these fund jurisdictions, you named a couple of them, like the Cayman Islands or the British Virgin Islands, it's more about where are the investors domiciled, where is the banking partner domiciled, how is the asset manager regulated, and that basically gives the necessary level of sophistication and the necessary level of trust that the investors effectively deserve. But you still have that topic when you root US dollars in a collective investment structure that adds a lot of complexity for all parties associated with that. It is an immense showstopper with regards to time to market. And as we all know, time is money at the end of the day. And time especially means opportunity costs and opportunity risks for asset managers. And what we've seen is that stablecoins, this already started off in 2019, 2020, do have a huge impact with how you access the underlying vehicle, right? So let's just take USDC. Forget about correspondent banking, forget about US dollars, forget about tips and Fedwire. We have an asset manager running a very sophisticated transaction and custody infrastructure in the back end. We have an administrator that understands source of wealth, source of coins, and has a decent approach to all KYC and AML procedures. They build competence. They add an operational layer of comfort. And as the regulatory framework in certain countries allows them, they can accept stable coins and not US dollars, and basically right away rock and roll with the USDC, for example, that they've just received, deploy them on their preferred execution venue, and basically get rid of all of these time constraints, and especially of a lot of economic constraints as well. And it's all about control again. The investors want visibility. They want transparency. They understand how things work, and they are not willing to basically just rely on this legacy US dollar correspondent banking system. Now, not all of them, right? Depends a little bit, again, how is the investor base built, but it definitely provides a lot of phenomenal opportunities to further systemize and increase the efficiency and how you interact with your preferred investment fund or with your asset manager.
Wow, there's a lot. If I'm able to unpack a couple of things, Luther, I really ask a couple of questions on this. So firstly, Jordan, I think it's what you've eloquently described is the improvement in the speed to market of access of investments, using stablecoins. So rather than having to wait for that dollar, you're using the stablecoin. But I guess where we've seen the first application of this is in typically crypto investment strategies. So I think it's sort of rather than dollars going into a crypto strategy, it's stablecoins going into a crypto strategy. I guess the exciting for me is now we're getting this convergence of tokenized equities, tokenized money market funds, traditional products that are now being traded in a digital format. So do you see this train expanding into, I'm giving you stable coins to invest in a traditional strategy, whether that's analog or whether that's a digital version of it? That's where I see it's heading. Are you seeing the same thing, or what's your viewpoint?
Oh yes, absolutely, 100%. If you had subscriptions in stable coins, that meant that you seek some kind of exposure in the field of digital assets, but this is definitely not the case anymore. We see a lot of tokenized real estate funds. We see a lot of more conservative investment strategies, and therefore it has truly become just a mean of how you access your preferred investment strategy, and not all about crypto anymore, especially if we have this romantic view on how you could possibly act in the future, where we have the shareholder register on a blockchain, where we have a underlying smart contract where investors bring in a stable coin. We have an oracle that feeds in an NAV. You right away get the underlying investment fund tokens shifted into your wallet, and you basically have a lot of convergence within that whole setup in order to basically access the underlying asset classes. But convergence is a key word. Interoperability is a key word. We're having a lot of optionality that from time to time can be confusing. Different blockchains, different stable coins, and therefore a different operational framework for the administrators, the asset managers, and the banks that are involved in the servicing of these investment funds.
Yeah, it's so true. And I guess we are seeing that convergence firsthand. If you look at sort of the fund administrators, the people like the Apexes, they're already buying, Tokeny, for example, to tokenize their investments, to make it smoother for people to integrate with these things. And yeah, I'm based in the UAE. I'm seeing tokenized real estate now investments that are happening here. And I know Bank Frick has an office in Dubai, so obviously they're plugged into this ecosystem. I did want to ask a question, given your location and given Bank Frick's origination. How are you seeing the pickup of Euro stable coins into this landscape? Because, we now have non-dollar stable coins. Quivolis is a good example of a pretty well-regulated consortium of banks that are doing a Euro. Is there demand for that in your audience, or are they saying really the speed to market is just, I want a dollar stable coin, it doesn't have to be Euro at the moment? Or what are your thoughts at the moment?
That's an interesting question. And let us circle back to the UAE story that you just mentioned, because we tokenized the very first regulated AIF with Tokeny back in 2020. And
Wow.
that's a example of how cool things can be and how sophisticated the operational framework can be, but where you could have this interoperability as a showstopper, right? But coming back to the Euro stablecoins, here we're missing a regulatory convergence because investment funds bring on their own regulatory regime. So it's not only about regulating stablecoins and bringing a higher level of sophistication into the game there. It's about the fact that once you build an AIF or once you build a usage structure, so the two large groups of products that we have at hand here within the European Economic Area or the European Union, investors can only access in regulatory fixed currencies. That means pound sterling, euros, Swiss francs, etc. And wherever you have stable coins, you have enhanced due diligence, you have contributions in kind, you need to have a conversion agent, and that adds a huge layer of complexity. Now, we would like to enable that. We have definitely the operational capabilities to increase the efficiency, to cut costs for the investors, as well as for the fund promoters, and for everybody associated. But we need the right regulatory regime on the fund side of things, not only on the stablecoin side of things. Right now, what we would need is even more demand that we have, and even more pressure from all stakeholders that contribute to the entire value chain of setting up and running an investment fund. But it's definitely a very hot topic, and it's definitely something that we have on the radar.
It's really fascinating.
If I can just say one more thing, and the most beautiful thing has been 21 shares or VanEck, right? We are paying agent of 21 shares and we are custodian of VanEck. That basically means we proactively service their ETP and ETN program from two different perspectives. But authorized participants and market makers already access ETPs in a fully DLT manner. So we have no cash creations of ETPs. They right away contribute in the underlying asset. So the processes are in place. They're up and running. We can make it happen. And this just needs to be reflected and implemented in the more regulated world of investment funds, and hopefully sooner than later in ETFs.
That explains a really interesting thing, because this has always been the argument that people are talking about, which is that ultimately, by tokenization coming into play with fund structures and the underlying product, you reduce cost. It's much easier to tokenize things than it is to actually do paper ledgers and all that kind of thing. But it always used to fall down because ultimately only half the value chain, half the process was on-chain. So you were splitting between off-chain, on-chain processes, which ended up being more expensive. So then actually in total, but now you're showing me that you've actually created the whole process where the whole thing is on-chain now, which means that truly you can benefit from the economic savings of blockchain, and therefore the end customer should also benefit from it as well now.
And you can exist as a bank, right? So it's again about adapting. It's just going with the capital flow, right? And generally, a lot of players in the financial industry need to find their place. Nobody's taking anything away. You just need to move a little bit around it, and you will stay relevant as a banking partner in this context. Not always in the very same context, but you need to show some flexibility. And what you just said was our major issue in 2020, because you can access an AIF, but you can access it in Swiss francs and dollars. So we have a fiat legacy subscription coming in through the correspondent banking system, fully off-chain. And then you have the tokenization of fund shares and the share ledger fully on-chain. So you access it in a very, how can I put this mildly, in a very old school fashion. You travel in by public transportation and you travel out with a rocket ship, right? So it's a little complicated and it doesn't really work that way. So again, you need convergence. And the promoters and the asset managers that build these products, as well as the banks that act as delegated depositories of these underlying vehicles, must engage in talks with the regulator. They must further drive forward this phenomenal initiative that we have right now in order to make use of that momentum, because it will most probably go down that road.
When we talk about AIFs, which is alternative investment funds, if you took the globe as a whole, right, Đorđe, and you guys, you went from 35 to being a 300 employee plus bank now, right? From that perspective, spread across, as Rami mentioned, Europe, Liechtenstein, you got London, you got Dubai, etc. If you looked at the whole globe, where do you see the real adoption and real innovation coming when it comes to the tokenization, especially on the AIF side?
Well, you mentioned the Middle East, you mentioned Apex, and you mentioned the acquisition of Tokeny. And I think they are doing a great job. And you need players in the industry that come from legacy servicing, that adjust, that push innovation, and that add an immense layer of comfort within that context. So a lot has been happening there, right? And what you have as well is a lot of expats that are in the Middle East right now. We have some geopolitical tensions right now, but the investor base already has a lot of knowledge on how things work, right? And if you combine these two components, you can do a lot of great things. We see phenomenal initiatives as well in Liechtenstein and Switzerland, and generally speaking in the broader European Union. But a lot of innovation has definitely been happening there.
And that makes sense.
And we again try to be a part of it, right? So we have our Dubai office there. We're taking on the conversation with them, and we try to move along. We first and foremost check what are the regulatory requirements. We clearly calibrate and adjust to the strategic trajectory that we have within the bank, and just see if we can rock and roll there as well.
Yeah. And I would say that, certainly being here now for 2.5 years, the regulators here are extremely proactive and really supportive of the crypto ecosystem, stablecoins and beyond. And in the UAE, as you know, it's quite a fragmented but coordinated ecosystem. So there's Dubai, there's Abu Dhabi, there's onshore, there's offshore, but it all works. And it's actually really, really interesting and all have different advantages. Bank frick in this ecosystem would work very, very well.
Absolutely. And I think it's good. It's good to have healthy competition. I mean, this is a completely new financial industry that's being formed there, still new, even though a lot of people know about Dubai and Abu Dhabi and other countries in the region. But this competition is extremely healthy, and they push themselves to operational excellence. They need to show some innovation. They're not sitting on a legacy client base, so they need to move along. And I think this is an immensely important part throughout this journey, and I love the mindset that we have down there.
Yeah. How big is your office down there, out of interest?
We have our SEO and 2 or 3 employees that basically support business development activities that cover a couple of operational and administrative tasks, but it's still being formed. It was a unlucky moment in time launching in December, as you all know, or when you think about what has been happening, I think from February the 28th, when all of these geopolitical tensions started to really kick in. So we're still finding ourselves there. What helps a lot is that we grow organically, that we have a lot of partners already sitting there, that we have clients sitting there, and that the whole ecosystem and the whole industry is just built again on healthy competition, on a very healthy drive, on healthy energy, and we're being welcomed with open arms.
Great to hear.
Similar to Rami, I've lived in Saudi in the region in the past, and what always has amazed me about that region is that while it is 95% immigrants, right, there's a sense of solidarity amongst everybody, and they want to actively work to solve a problem together, and then they kind of have a resolve, even though everybody comes from a different country and they're living there, but there's a certain resolve that I find fascinating and quite welcoming in that part of the world. So I completely understand what you're saying, Đorđe.
Absolutely. I mean, it's a great example of how things can work, how you respect local culture, and how this multicultural approach can contribute to a lot of good things if you can identify and align from a broader perspective. So really, the energy is infecting. It's vibrating, and we don't want to miss out on that, and we want to bring on the expertise that we have from Europe and contribute to further developing this ecosystem.
Yeah. As we start to wrap up, Đorđe,
Sure.
Where do you see the future? Like 2 years from now, what do you see markedly changing from where we are today?
So I'll focus on the operational side of things. I see a further consolidated regulatory regime. I see more operational and regulatory convergence. And I see that asset managers, banks, auditors, as well as the investor base will opt for a single infrastructure solution. I just told you about that romantic vision of subscribing through a stablecoin, having an oracle feeding in the NAV, receiving fund units out of the underlying smart contract, having the share ledger on a blockchain, and still having the bank giving the underlying asset manager the operational capabilities to get the exposure to the underlying asset class. It doesn't really matter if it's digital assets, can be fixed income, can be conventional equities, or can be digital assets. So that's what I think where we'll be going. And I don't think that the traditional world will just stop to exist. And I don't think that we should be burning bridges. I just think that we should build together a second, third, and fourth bridge in order to just channel the demand that we receive from the investor base that is at the end of the day the most important component throughout an investment fund journey. And while we opt potentially for bridge 2 or 3, let's focus on improving bridge 1, the legacy bridge, right? And just further push development, further push innovation, and let's make each other better throughout the entire industry.
You're spot on. You're spot on. I think your analogy earlier, we're still coming in through a public transport and then exiting through a rocket ship. I think we need the rocket ship bridges while we still continue to use the public transportation bridges.
Absolutely.
And to your point, let's make the public transportation bridge slightly better, right? Since we have the opportunity to do that. So.
Absolutely. The fund promoters at the end of the day basically decide themselves. If you have a train station and a bus station, why not build an airport, right?
100%.
And this is bridge 1, 2, and 3. And everybody can decide, or the investors should decide on how they effectively want to get to the destination. Not everybody has the same wallet. Not everybody has the same know-how, and that's what we should focus on.
Spot on. And where can people find you, Đorđe?
People can find me on LinkedIn, Đorđe Žarković. It's a little complicated, so probably
we'll have it in the show notes.
Probably in the description of the podcast. And yeah, guys, it's been a phenomenal conversation. Thanks a lot for having me today. Truly enjoyed it.
It was wonderful having you. Thank you so much. What Đorđe made clear today is that the friction in institutional capital formation isn't just ideological. It's true plumbing. If you're a fund manager or a family office or an institution that's still wiring USD, send this episode to your prime broker or your fund administrator. Like and subscribe wherever you get this podcast. We'll see you on the next episode. Before we wrap up, a quick disclaimer. The opinion expressed here are those of the hosts and the guests and do not represent the views of their employers or affiliated organizations. The conversation is for educational purposes only and should not be taken as legal, financial, or investment advice.